My name is Jess, and I did the Section 179 deduction as my project. What is Section 179? Section 179 of the IRS Tax Code lets businesses deduct the full purchase price of qualifying equipment, which includes computers and software, purchased during the tax year. What this means is that when a business qualifies equipment or software, they can deduct the full purchase price from their gross income. The tax code is meant to encourage businesses to buy equipment and invest in their businesses. It is meant to help build the business up. Section 179 of the IRS Tax Code allows a business to deduct from the current tax year the full purchase price of financed or leased equipment and off-the-shelf software that qualifies for the deduction. The equipment purchased, financed, or leased must be within the specified dollar limits of Section 179, and the equipment must be placed into service in the same tax year that the deduction is being taken. The deduction is good on new and used equipment, again, and off-the-shelf software. What is not allowed to be deducted are items like heating and air conditioning units, barns, buildings, landscaping, fences, lands, roads, and etc. There are many things that are allowed for the deduction, and this includes tangible personal property, but not foreign used property. The IRS has two general requirements. The property, called qualified property, must be tangible, depreciable personal property, which is acquired or used in the active conduct of a trade or business. Personal property here means that of items like office equipment or furniture. More tangible items of nature, rather than land and buildings such as barns and warehouses. The property must be purchased and put into service in the year in which you claimed the deduction. Putting an asset into service means that you have it set up and working and you are using it in your business. Buying a piece of property and then letting it sit and gather dust does not count. The amount of equipment purchased and leased may not exceed whatever that year's spending cap is. This makes Section 179 a true small business deduction. The 2017 deduction limit is $500,000. This deduction is good on new and used equipment, again, and off-the-shelf software. To take deduction for the tax year of 2017, the equipment purchased or financed must be put into service between January 1st, 2017, and the end of the day on December 31st, 2017. This year's spending cap is $2 million, and this can be spent on equipment before the Section 179 deduction available to the business begins to be reduced on a dollar-to-dollar basis. Again, this is the true small business tax incentive, because larger companies who spend more than $2.5 million on equipment won't get the deduction. And the bonus depreciation is 50% for 2017 and is generally taken after the Section 179 spending cap is reached. Bonus depreciation, again, is generally taken after the Section 179 spending cap is reached, and it covers new equipment only, while the 179 covers both new and used equipment. Bonus depreciation is useful to very large businesses spending more than whatever Section 179 spending limit is for the year. Also, businesses with a new loss in a given tax year qualify to carry forward the bonus depreciation to a future year. Section 179 deductions are taken first unless the business has no taxable profit in the given tax year. Several years ago, Section 179 was often referred to as the SUV tax loophole or the Hummer deduction, because many businesses have used this tax code to write off the purchase of qualifying vehicles at the time, which were SUVs and Hummers. Today, Section 179 is one of the few incentives included in any of the recent stimulus bills that actually helps small businesses. Although large businesses also benefit from Section 179 or bonus depreciation, The original target of this legislation was much-needed tax relief for small businesses. The incentive or bottom line here is to encourage economic growth in American business by getting companies to invest in their businesses. Using the Section 179 deduction can greatly help your bottom line. By deducting the full cost, you lower the amount you pay for equipment and/or software substantially. This means that if you buy or lease a piece of qualifying equipment, you can deduct the full purchase price from your gross income. When your business buys certain pieces of equipment, it typically gets to write them off a little at a time through depreciation. In other words, if your company spends $50,000 on a machine, it gets to write off approximately $10,000 a year for 5 years. While any write-off is better than no write-off, most business owners would prefer to write off the entire purchase price of the equipment. In fact, if a business could write off the entire amount, they might add more equipment this year instead of waiting over the next few years. That's the whole purpose behind Section 179, to motivate the American economy and your business to move in a positive direction.